Excuse me, sir. It's time for your appointment.
How are you?
There.
Okay. there's so many links. There's a link to view, which I think is the one I posted. There's a link. This automatically records to YouTube, so there's a link for YouTube. Then there's a link to just view the Hangout, and then there's another link to actually join the Hangout.
Yeah.
So I got my links confused, but I did send a join, but I don't think you guys get that. You must not get that email or something.
You know what? I didn't even go to in the Google thing. I get a little pop-up about a message. I didn't go to my email. Let me look at the email actually, and see what came through on my email.
Yeah, see if there's one that says join, because there's one to view, one to join.
Let's see here.
I just put the wrong one up here.
ThinkTank shared at 4 o'clock. There's a link here, plus.google.com/events, and a whole bunch of things after that.
Right. That's the one to join.
Yeah, okay.
It's different. The one I just sent you, the last one, is the join. There's one to view, which is the first one I sent you. That just puts you in a viewing mode. So you.
Yeah, it's like you're up on YouTube, and I saw you sitting there at your desk typing away, and I thought, well, this is different.
Yeah. Yeah, and then it does a third thing where it streams to YouTube. That's actually how it accomplishes recording the call, because it streams it to your YouTube account, and then YouTube records it as a video, and then it stays up there. So there's like 3 different functions going on here.
Okay.
So right now, so I posted the join link up on the event. I've also posted it in the community. I've also invited every member of the community. I don't know what more I can do.
Yeah, let's give them a few minutes just to.
I know Ann just sent me a request to join, but I just said accept, but I thought she was already invited, so I don't know. I don't know why that is. If you click, just to confirm, if you click on the Google Drive icon on the left part of the Hangout, over on the left menu, do you have that left menu over there?
Yep. Let me find the Drive. Google Control Room. Google Drive. Yes, and I did add those 2 files that Ann sent.
Yeah, I saw those in there. I was just wondering, when you click there, are you able to see the folder?
Yeah.
Okay.
Yeah, I can see it with everything posted, and it has my.
Okay.
Yeah, Ann's document from today at 2:44, and
yeah,
there's a thing member trades. I don't know. Has that been updated maybe?
Yeah,
maybe.
member trades is that's our running spreadsheet.
Yeah.
I already put my trades in there from today that we did this morning.
Yeah, I wait until I get my confirms, and then update. And I've got it. I updated it today as well, based on my confirms.
Okay. So what I'll do is today I'll let you guys run with this. I've got to duck out of here at 2, but I'll just let the thing run. It's not gonna.
Yeah. Okay. And I have to. My call that was supposed to be at 11:30. Evidently, the people are out on the West Coast, and they screwed up the time change, and so it's 5:30 my time.
That's 2:30. So it's like an hour and a half.
Yeah. I've got an hour and a half to do this call.
Okay.
If I go back.
Stopped raining here finally. So just to put the rain in perspective, so the average rainfall in Chandler, Arizona is 6 inches a year. We got 5 inches in 5 hours last night.
Wow, that's unbelievable.
So you can probably guess we're not well equipped to handle that amount of rain in the valley. So there were cars literally floating down the freeway, like
Wow.
our major freeways in certain spots because the water, the drainage just can't handle that much water,
Yep.
and they just didn't think that it was going to, the water would flood that quickly, and it just filled up. People tried to keep moving along, and it should make national news. Well, we have Monday Night Football tonight too. That's actually where I'm going
Oh,
this
wow.
afternoon.
Uh-huh.
So I'm going to the Cardinal game.
Uh-huh.
We have Monday Night Football tonight, so it'll be interesting. I just got an email from Eric. Just posted the link again.
Yeah, I think many of the people, including myself, just aren't overly familiar with the Google ecosystem, and where is the link and how to, it just takes a while to learn it. That's all.
Yeah. Yeah, and it's hard for me to tell what's going on because when I start the Hangout,
Yeah.
I just basically have this icon at the top that says invite people. So I click on that, and then I can choose our community. So it tells me 17 members will be invited, and then it says everyone you invite will be sent a notification and stream post in Google Plus. Invites with more than 25 people are always quiet, which quiet just basically means it's not going to notify you. But so I imagine if you log into your Google Plus, there should be a link there that's inviting you to the. I thought it would do over an email. Did you say you did get an email?
I did. Yeah, I got an email from. I checked my email and I did get it. But the first email pulled up the first link that I saw pulled up the YouTube video because I was on early, and I figured, well, this is different, maybe because I'm early. And after a few minutes, I realized I'm watching you. You can't hear me at all, and that's when I sent you that Skype chat message.
Where did you click on that link? Did you click on that link from your email, or did you click on that link that I posted in the?
I'll tell you where I went. When I hit
Because I did
Google,
post the wrong link at first.
when I go to Google, just google.com, I'm already logged in, and there's a bell. There's a bell up top with notifications, and there was a notification there.
Okay.
And that's where I clicked on it, and it brought up that other video. Now, Ann just commented, I joined the Google now.
It doesn't have a webcam.
Oh, she does not have a webcam, maybe.
See, the link is right there. That's the one to join, but I don't see her join. I don't see her. There's nobody else in the call.
Is she there? Because I don't see her on my call thing.
Yeah, no, she's not. It's showing there's 2 viewers. I want them to join, not view.
Where's my Google? Where are you now? Gee whiz. ThinkTank call. That's weird. Oh, I see. Yeah, I just see you and me.
Let me try something. I'm going to try this link for my laptop just because I'm curious where it takes you. It should take you to join the call. If that's what it did for you, right?
The last one that you sent me.
Yeah.
It
The
brought
one
up,
that I have, yeah, I have it all over the place now.
yeah, it brought up the actual Google Hangout. And it says plus.google.com/hangouts.
Right. She says, I can hear and see you both. She must not be in join mode.
I wonder if she's on that thing that I saw, the YouTube video. Oh, I see someone else now.
Okay.
And join.
It's me. Can you hear me?
Go.
Hello.
All right.
I don't
Is this
have.
Ann?
Yes, this is Ann. So I don't have a webcam on this work computer,
Yeah.
but I can hear.
Yeah,
And
that's
you can hear
fine.
me. Yeah.
That's great. So you click the link just to confirm the link that I posted in the event or on the community. That's the link you clicked, right?
That's right. I didn't go to my email this time, although my email may have had it. But I went to the community and I clicked the last link that you saw put there, right there.
Excellent. Now Ed's in too. Yeah. So I was explaining to Alan that it's a little complicated, but there's 3 different links. There's a link to join the call. There's a link to just be a viewer, which technically we could have hundreds of viewers, but you can't really share anything. You can just watch. And then there's a third link on YouTube that actually, that's the recording of the call. So that one, we don't want anybody on except later if they want to go and watch, for whatever reason you want to go back and listen. YouTube is just what gets used to record the call. So
I'm hearing another conversation on here.
you probably have the YouTube link open. YouTube link is delayed. Close that in your browser and just stay in this call. You're in the join part of the call, which is the live call. Because it's possible to be watching on the view side and be joined in the call. Oh, he just closed his join connection. And you're still with us, right?
I sure am.
Okay. While we're waiting, I got an email from Eric too. I thought he was coming in. There, Ed's back. So did you figure it out, Ed?
I went to shut down something in my browser. It hung up. It disconnected me. Whatever. I'm back.
Okay.
I know that stuff works, but I got to tell you, for me personally, this is not brain dead. This is kind of hard. It works. There's no doubt about it. It's just that it's not easy. And I didn't get on until you sent out that link, because the page you sent out a few minutes ago about yes or no and click on this. There was no way for me to find it. And yes, I went up to the bell and I clicked on stuff there. I was a clicking fool. And I've been on this before, so it's not like I haven't made it happen. But again, it's just not brain dead.
Yeah. Yeah,
It's almost like we need a YouTube video for instructions.
Yeah.
I mean,
Yeah.
I'm not trying to say, hey, look, put together a YouTube video, but I'm saying this is hard.
Yeah, no, it is a little bit complicated. I think just figuring out. I made the mistake of originally posting the view link. I posted the wrong link instead of the join link. There's a couple different links that need to get posted. But what I'll always do in the future is post the join link to both the event stream and the community stream. It's in there now, the community stream. If you look, the link is posted in there. But that link should, if you click on it, should have you join the call. There's two types. You can view the call and join the call. You want, obviously, if you're going to share, we want everybody to join, unless somebody wants to just view. So we'll figure it out, though. Anne.
Yes.
So welcome, Anne. This is your
Hi.
first call with us.
That's right.
I was trying to get Eric in on the call too, but I guess we'll go ahead and start. I was telling Ellen I have to head out of this call at 2 o'clock today. I'm gonna just let it go, so you guys can, of course, use it to your discretion and keep going as long as you want, and then quit when you need to. The one thing I wanted to check with you, Anne, was that you have access to the shared drive folder.
Yes, I do.
Okay, did you figure out how to get access to that in Google Drive?
Yes, I did.
Okay, great. And it looks like you've put up some of your trades as well.
Yes, I have.
Great. Also, as far as tools go in the Hangout today, if over on the left, if you click on the Google Drive icon, which is kind of that recycle rainbow-colored looking icon, if you click there, you should be able to see. I've shared the Trader ThinkTank member trade spreadsheet. You should be able to see actually all the documents in the drive, but specifically the member trades, since that's kind of what we're going to talk about.
Yep, I see them.
Yeah, so I think for the people that are on the call today, Anne, you and myself and Alan all have our trades. I know I have my trades up to date, Alan. I think you said you have your trades up to date.
Yeah, mine are up to date until I have the confirm. The trades that we did today, I have not posted up there. I wait until I get the confirm, and then I post it.
Okay. I think the best way to start today is, I know, Anne, I'm interested in, I know we had a little bit of conversation. I think everybody's had a little conversation with you. And since you're new on the call, I think you should take top priority, and we should talk about your SPLK trade specifically. But then also, maybe before we even start that, you could just tell us a little bit about your trading experience. And I think you mentioned you're trading on, you're not on TOS, are you? You're trading, you're using a different platform, aren't you?
Yeah, I use IB, but I use TOS Interactive Brokers, but I use TOS just to do analysis.
Okay, so you do have TOS installed.
Yes, I do.
Hey, Richard, how are you? Can you hear us? Richard, can you hear us? He's in on the call. Can you hear us?
Yes, I can hear well.
Okay, just welcome you to the call. Anne is on the call. She kind of has the spotlight right now, where she's going to just kind of tell us a little bit about how she trades and whatnot, and then we were specifically going to talk to her about an earnings trade or a trade that she's working with, the SPLK trade. So we're referring to her trades in the spreadsheet if you want to reference that. So go ahead, Ann.
Yep, I'm very new to trading. My grandmother actually made a lot of money in 2000. Of course, that was when the stocks were going way up. And I have some money, and I just want to be a good steward of what I do have. So I started out actually doing a lot of value investing with Phil Town. I'm actually know him pretty well. And also found the Dow newsletter, which I was so generously given to share with you all by the guy who does the Dow newsletter. I correspond with him some. I just want to find what works well for me. I like to keep things simple. I'm a senior developer, programmer, analyst. and so my mind's pretty good, but sometimes I get confused, so I have to go very slowly with things sometimes. Not a real good trait for programmers or for traders, but it does keep me sharp, I guess, hopefully. So I had made some mistakes probably in a trade that I did recently, just following some advice of another friend that I have on Tasty Trades. And all I want to do is get out with as little damage as possible. I'd also like to learn as much as I can about Karen's trading style because I like to keep things simple, and that might work really well for me in my brokerage account, which I don't. Now I have 85K in it, but someday I'll have more, and then I could do the portfolio margining. In my 401K, I can only do. I can't do any stocks. So what I do is I just do the SPY, and I use what the Dow Theory newsletter says to do. In my IRA and my Roth IRA, what I've been having is value stocks like BP and stuff like that. So I'm just trying to figure out what works best for me. You guys are all sharp and very smart, and I want to learn as much as I can and not be too much of a pest. That's it.
Oh yeah, of course not. You won't be a pest. We're all here to exchange ideas and learn from each other, and no one has all the answers. I'm sure everyone would agree. So let's talk specifically. Thanks for sharing that.
Sure.
That was excellent. Let's talk specifically about your SPLK trade, because that is the one I think that you brought up on the community and the one that you just referenced, correct?
Yes, I even made a document about it this weekend that I think Alan might have put on the share drive. I didn't take a look.
I did. I posted
Yeah.
the newsletter and your document. Both of them are up on the share drive.
Okay. So I'm looking at your trades. You have this highlighted in blue. I'm just looking at your trade sheet. Your trade.
Yes.
And so why don't you? So it looks like on August 27th, you sold 39.5 put. It looks like a strangle. 42 calls. I'm sorry, 52 calls. For August 5, is that?
Let me see. I'm not sure. I need to get it up too.
Okay. For looks like 12 contracts for 20 cents on the put and 12 contracts for 35 cents. I'm just making sure that this is it was 2 days before expiration, so it was an earnings play, I'm assuming.
Yes, that's right.
So it must have been on a Wednesday then. And then what happened to the SPLK? What happened to the actual stock at that point? You had the 39.5 and 52 spread, or not spread, but strangle.
It went way up above the call, so I knew that I needed to either just close it for a loss or roll. And what I was told to do was to do something fancy, just roll to October, and that's what I did. And I used the same call. No, just a little bit over the call. So then I was in October, and I brought the put up a little bit. And then I didn't know what to do, and then I thought, oh gosh, look, the put I can bring up a little bit more, so make a little bit more of a profit. And that was a couple days after that, and since then I've done nothing except for analyze and watch something that Tom and Case did about what to do with strangles, like doing an inverse strangle, and I tried to even see what would happen if I did that. I did a whole document yesterday. And I thought, oh boy, I'd lose some money, but maybe not as much money. I just want out and just to have as little loss as possible, and I shouldn't have done it like this way.
Right. So I think we kind of had a brief conversation about this. So the way that, well, Alan and I have been trading together quite a bit. So the way that we approach these strangles like this especially on an earnings strangle, is typically you want to get in and out as fast as you possibly can, right?
Yes.
So we typically will put them on, and we will once the strangle's put on, you're actually best served by treating the strangle in two separate trades, right?
Right.
Because if the stock goes up past your 52 call like it did, you're actually in a good position with your 39 and a half.
That's right.
You can unbuckle these two and expire your 39 and a half and take max profit on it, correct?
That's
so now
right.
all you have to do is worry about your call. And this was actually a great earnings play position, because earnings plays that are only 2 days away from expiration are perfect, because you actually can wait. If things go well, you can wait it out, and you only have 2 days to wait for expiration and take max profit, right?
Yep, that's right.
So kind of looking back on the trade, and Alan, jump in here, or anyone can jump in here anytime. Looking back on the trade, so do you remember exactly where the stock went to? Did it go to 54? You said way above 52. Did it go to 54, 56?
I think, I can even look in
Yeah, I could look up
the
on the chart.
thing. Let me see.
Yeah, I had the chart up.
So let's just theoretically say it went to 54. So now, of course, you're in the money, and you know your call is beat, but your 39.5 put, you're just going to leave that alone, right?
That's right.
And what you're going to do with your call is, since the goal is, again, as you stated, the goal is really to get done or get out of this trade as fast as possible. The best thing, the way you want to start defending that trade is you want to start looking at the closest roll up for the next week. So using the weeklies, and what we like to try to do is see if we can roll up for a credit, roll out and up for a credit. You know, it just depends. It depends obviously on where the price of the options are, but try to do it as soon as possible. You know, go to the next week and see what you can get it for. If you can get it for 0, then you want to move. You know, you obviously want to take advantage of that, because what you're trying to do is you're trying to, you know, it's potential that the stock rose on earnings, and then it will typically come back and it'll fall back into place. You know, it might settle back down to 50, and now if your expiration is only in the next Friday, then you're gonna, you know, now you have the advantage of time, and you can take that trade off potentially for even, or you can let it expire and be out of the trade.
Right.
So when it comes to earnings, that's how we approach, you know, those trades that get threatened, or if one side of your strangle gets threatened, that's how we would approach it. And then we would just keep rolling. I think if you look at my trades, you'll see. So if you look at my sample trades, I've highlighted several of my trades that the same thing happened to me in those trades. You know, it happens. Trades don't always, you know, go perfectly, especially earnings strangles, and you have to roll them. But you can see, you'll be able to see on mine, and it doesn't always work out. I'm struggling with a few now, but you can kind of follow the path and see where I got threatened, and then I rolled out and up to the next week. I waited it out, and I finally got that stock to expire, which is obviously best case scenario.
Right.
You know, the worst case scenario is like my Facebook right now, which is you roll it out, and that stock is you know the stock's never going to come back to where you're at. So then you're going to have to obviously just bite the bullet and close it, cover it, or you know, do some other do another strategy or something to make up for the loss. So, Alan, you have anything to share on that?
Well, yeah, you
I've
I think you
lost it.
covered the basics. The issue that Ann is in now is that what she did to roll out and up, in a sense, is she rolled all the way out to October. And so she has a tremendous amount of time value sitting in her account, so to speak. And what I've advised her to do is at this point, sit tight and let the stock sort of balance out a bit. If you believe in technicals, just looking at the chart, and I'm not an expert in terms of reading charts, but to me, SPLK is running up against some resistance in this, call it $60 to $65 range, and I would watch that area very closely. This was a high flyer. I mean, just looking at the chart, you can see where it literally exploded all the way up to 106, came all the way down to the low 40s, and now based on this most recent earnings, which were much better than expected, everyone's piling back into it. It was one of these momentum stocks, and people left it in herds, and now they're slowly coming back in to it. So, for me, if it were my account, I would watch it over the course of the next week or so. Make sure that you don't see any strong moves up, because if you start seeing strong moves up, you have to start to be careful at that point, with the hope, expectation that as the days go on, your theta is decaying, and perhaps at some point you can buy back I would buy back the calls, leave the puts alone, but buy back the calls and close the position and move on. I also told Ann, to check with the analysts. I think I sent her a Morningstar report. Most of the analysts have price ranges for the stock in the $60 to $65 range. So hopefully it's made its move, and now she can just depend on that theta to decay as time goes on to get out of the position. Now, you don't want to take too much risk. I mean, certainly you could start selling puts like crazy to make back money, but that adds risk to the account, and I didn't want to tell her to add substantial to her risk on this one trade, because it's not a stock that I get the feeling that she's in love with and really wants to own. In a sense, it was purely an earnings trade. It went well above the expected move, and here we are.
You're right. I don't want to own it. I think what I'll do is I'll just sit tight and keep an eye on it. Hopefully, it won't go up much higher, and then decide what to do next, knowing that there's a good chance I'm just going to have to take somewhat of a loss on it.
Maybe. I mean, you have time with it, and we calculated the break-even points, and I forgot exactly what they were, but you're right there.
Yeah, I think 56.23.
Right.
Yeah.
So you're within,
Yeah.
strike. I mean, it's a volatile stock. The beta is high. It's going to move with the market.
Yeah, you're about 3 points away.
Yeah, you're close.
Yeah.
I wouldn't get too nervous at this point. Even if you saw it move up, a bit, it's going to move. It's certainly going to move. But if you see some big bars up, that to me is an indication that people are taking positions in it again. What I see looking at the chart is two very large bars up. So people were taking positions and pulled back a bit, and the last 3 days have been relatively small bars.
That's right.
It seems to me, at least short term, it's settling down. So stick with the trade for now, take the theta decay, and reevaluate in another week and see what happens.
Okay, thank you so much. I really appreciate your input.
Oh yeah, no, that's what we're here for.
So just real quick, and just so I make sure I'm reading this right, did you roll this twice, actually? Did you roll it to the 45 and then to the 47.5?
I rolled the put twice.
Okay.
Yep, because I thought,
Okay,
let
so
me take some of this. Yeah.
You got 76 cents when you rolled it to 45, and then you sold it again for 56, so you made a small profit there, and then you bought you sold the 47.5 for 84 cents.
Yes.
Okay. And what's that one sitting at now?
See that I could definitely bring the put up some more. Um, I don't know.
You could. That's one strategy.
Yeah.
What I would recommend doing, you're adding risk by rolling it up because you're getting closer and closer to in the money. If you wanted to do that, wait for a down day when the premiums are going to be better than trying to roll it up on an up day. That's my only advice.
That makes sense.
I don't know if I'd roll. Let me just look at the chart again here. In terms of rolling it up,
It's 65 cents, so it's actually lost. It's worth 65 right now. The 47.5.
that's where the put is now, 47.5.
Yes.
Yeah, it's 65 cents.
Yeah,
So
let me-
it's lost about 20 cents.
if you rolled it up to the 50,
Oh, I'm sorry. Gained 20 cents, sorry.
you're not going to get but so much for it. But I don't know if I'd go too much higher than the 50 on the put. And again, you want to be careful you don't get inverted. That's what you and I were talking about before. I don't. You only want to go inverted when you know you're locking in a loss, in a sense, because that's in effect what you're doing. Unless you can depend on constantly rolling that inverted position to bring in theta, in a sense, and then you do not want that stock to move around too much.
Yeah.
And this is a stock that seems to move around a lot.
It does. It has a high beta, so it will move. Yes.
Yeah, I agree with Alan. I think just sitting and waiting for right now, at least until it gets closer, then you might be able to then you might be able to sell some puts or something or move it, roll it up if it starts to go away from you.
Okay, that's what I will do.
Yeah, I mean, we all run into those. There's, that's part of that philosophy, number of occurrences. You're definitely going to run into a few, when you do a lot of these earnings plays and you do a lot of occurrences, you're going to run into a few that, go against you. So hopefully, you do, and it looks like you have in your other, I mean, you've got a lot of expired worthless. So I think you've got the right strategy down. I think just splitting apart the whole concept of splitting apart the strangle that goes against you, I think will help you. You haven't been doing that in the past, splitting them up?
I have, but I just followed the advice of someone without blindly. And that's what this person said.
Gotcha.
Another thing I need to do is think about when I'm getting better at deciding which ones to play, but when to get out. That is an art. I know it's probably a science, but I just don't know all the rules of I like to do weeklies so that I can just I don't have to buy them back. I can just let them expire. But there's a point when on the day after or that day where if it's gone up a certain amount, then I want to get out. And I'm just not sure what that is, when to get out, because I could have been smart. I could have gotten out of this one, but I just didn't. I thought, oh, it'll be okay, but it wasn't okay.
Yeah.
There's a tendency on earnings plays, and again, there's no right or wrong answer. You can go back and look at history in general. Doesn't mean it's necessarily going to apply to your particular stock that you're playing in terms of the earnings play. But if a stock beats earnings and gaps up on the open, there's a tendency for it to continue to run. And what I have found in the past, and it's call it 50-50, so it's luck. If you put in a trade right when the market opens, you close your position, sometimes you get lucky and you get an easy fill, the stock continues to run up and you're out of the position. It doesn't always happen. Sometimes you have to start rolling up the price that you want to buy back the particular option at. But on a stock that gaps up, it typically continues to run up in the market. Now, some stocks that gap down, have an earnings miss, then you have to look more at the fundamentals because many times they'll gap down and they'll recover either that day or the next few days if fundamentally the stock is still a decent company. It's a high flyer, with no earnings and God knows what else going on, different story. But if you're playing a decent company on the downside, you have more protection.
That makes sense.
Yeah, as a general rule of thumb.
Great. Yeah, that's kind of focused around earnings plays. Are there, earnings is obviously kind of over at this point, but is there anything else we wanted to share with Ann when it comes to earnings strategy? I think she does it pretty similar to the way we do it. We primarily trade strangles. Do you have a certain, how are you determining your strikes on the strangles?
Yeah, I actually even have a formula. I might have sent it to Alan in
You
an
sent
Excel.
a very sophisticated spreadsheet. I thought, wow, he is down.
Oh well, yeah. What I do is I find out what the expected move is, and then I multiply it by 1.5.
Yeah.
And I do look at the charts. Probably not as much as I can, and I do like to have and then I follow some other rules that I've found in Tom and Case, just about the volume and what the interest is, and then in fact there were two of them that I corresponded with Alan about. And I realized that probably the risk wasn't worth it. That's one thing that I haven't realized. Is sometimes I only get a little bit of money, but the risk is pretty big. One thing that again is that how do you know when to hold, till expiration? Let's say a weekly, and when you need to buy to close. And is it just you buy to close that day, that morning? Something happens to make the decision, I'm going to buy to close right now, or I'm just going to let it expire. And is that if it goes up past some amount, or what is it right there that makes that decision? Because I know that Tom, they just close it no matter what.
Yeah. That's Alan and I take a little bit different approach. I mean, I know the rule of thumb is 50% profit, and then if you watch Tasty Trade, I mean, they're very mechanical when it comes to that, and they close buy to close trades. They cover trades, when it's at 50% pretty much all the time. And stop and interject, Alan, if I think that Alan and I, it's kind of, we do it more by real-time analyzation of exactly what happened after the earnings, usually typically first thing in the morning, because like Alan mentioned, I think that a lot of times you can get the general direction by looking right away, even sometimes after hours, but first thing in the morning, you can get the general direction of where things are going. If the stock didn't move hardly at all, then you can pretty much, and you have 2 days left and you're sitting right in the middle of your strikes, you can pretty much, we're willing to take the risk that it's not going to move much more than it would have if it gapped overnight. So those are obviously, if you're doing a strangle, that's actually what you want. Obviously, that's great. So I think, I mean, I hate to say that it's, yes, we look at charts and technicals and all that, but sometimes it's just real-time analyzation of where the stock, what the direction is, and then obviously how much time we have till expiration. We love the Thursday earnings because you only have 1 day, or Wednesday where you only have 2 days to wait for expiration. We definitely like to wait for we try to get expiration. I mean, we want to expire those puts, so puts and calls. So What else you have on that, Alan?
Yeah, I would agree. I think it's a little bit of a judgment call. If the stock just doesn't move based on earnings, you have to say to yourself, well, what's going to cause it now suddenly to move over the course of the next 2 or 3 days? And when earnings come out, that's it. That's the news that everyone was waiting for. So if the market was expecting, say, a 10-point move either up or down, and the stock moved a point or two, the chances of it moving 8 points over the course of the next 2 or 3 days are probably slim. And so, for me, I'm willing to take that risk. I'll certainly watch the stock over those next day or two. But more than likely, if it hasn't moved, I maintain the position and try to get it to expire worthless. Now, if it does move in one direction and gets close to my strike, well, then what I'll do is I'll let, for example, if the stock moves up, I'll let the put expire worthless, and I may buy back the call.
Got it.
And then move on. Or vice versa. If the stock goes down, it's close to my put, I'll let the call expire and buy back the put. I mean, the good thing with strangles, you're only going to be tested, for the most part, on one side or the other. The chances of getting tested on both sides in 1 week are pretty slim. I mean, you could get whipsawed, but those chances are few and far between.
So I had an idea. I can even create a formula for myself to see what percentage of the expected move did it move up, and just make a decision. Well, if it moved up 100%, oh, okay. If it moved up 75, well, maybe. If it only moved up 5%, then no. So I could just try to make myself some guidelines and also do some back testing.
Yeah, and look at. I think for me personally, I use candle charts. And you can look at the chart and look over the course of a week or two to see what the typical move is for the stock. And if the stock is only moving up or down a point a day, and it's not going to move 10 points all of a sudden after earnings if it doesn't move at all. So you have to look at that risk then, in my mind. Now, I'm not doing it mechanically. The correct answer that many people will say is take the trade off, remove all risk, and move on. For me, I'm watching every penny. I'm watching my commissions. I'm watching my trades. And if I can squeeze out an extra few cents here or there, I'm willing to do that for what I perceive as very little risk.
That makes sense. Now, when does the earnings really start again? Because I look at this thing called Earnings Whisper to see what earnings are coming up. I see there's Adobe's coming up in, I don't know, a month or so, but are they really over?
For the most part, the vast majority of the companies all report within a 6-week period, and it runs quarterly. I think there's a few stragglers like Oracle that's coming up in the next week or two. They're typically always reporting late, but they're on a set cycle. But there's any number of websites that report and give you lists of when earnings are coming out.
Right. Yeah, I have some.
Yeah.
Yeah. So all good points. Any other questions from anybody else on?
I didn't really want to come in.
Go ahead.
I didn't want to come in on the earnings side because that's not something I really have any experience with. But I do have something else to say. So I don't know whether you just want to, if you finished with the earnings questions.
No, go ahead.
Don't
conform.
Well, the first thing I wanted to say to Anne is that I'm using Interactive Brokers as well. I've had an account with them for, well, I suppose effectively 10 years or so. So I got some degree of experience with them. If there's anything she wanted to discuss about IB, and in particular, something that I discovered quite recently with them is the IB Risk Navigator that I've been using recently.
Oh, thank you.
Which is, I don't know if you found it, it's something a bit similar to the Think or Swim analysis page.
I saw the advertisement for it, but I have never used it.
I think it's worth using because it will give you a picture of what's going on with your whole account or the individual positions within it. I've actually found it quite useful. I mean, it's not perfect. There are a few slight glitches I've had, but on the whole, I found it very useful.
What is the advantage of using IB? Is it from a commission standpoint over Thinkorswim?
Well, for me, the problem was that I'm based in the UK.
Right.
I don't know if I've sent a couple of emails about it that they just won't open accounts for us. So there really wasn't any choice. I mean, IB seems a very good alternative, but given the choice, I think I would have Thinkorswim.
I use it because of the commission. The commission it's always under $1. I don't know what it is for Thinkorswim. Also because I did a computer program where I actually am able to read trades and dump them into a spreadsheet, and I made that actually for Phil Town to use if he wants. So I was just investigating it, but I don't need anything fancy. I can always go to TOS to analyze things, and I just did it for the commissions.
Gotcha. It makes sense. I think the commissions at Thinkorswim are much higher than what you're quoting at IB.
Yeah, the commissions are good. The problem I've run into with them really just now in the last couple of weeks, I became aware of their margins are definitely higher.
Yeah. I was thinking about that. But if you do portfolio margin and you only do the SPY, it'd be the same. It's only if you do futures. Isn't that where it gets different?
Yes, that was the point that I made. They're two separate margining systems. So if you mix them, so for instance, if you do some, if you open a futures position to offset a SPY position, then you won't get the benefit of portfolio margin in that. But generally speaking, their margins are high as well. I mean that problem of the different margining system, I think. I mean, I haven't checked, but I think is an industry system that they are separate. But specifically with IB, I mean, I have portfolio margin, and my margins are very high compared with it was Jeff, I think, who mentioned some of the margins on positions that he had, or he got quoted for, and they were significantly higher. I mean, like 3 times higher, that sort of thing. And in fact, I've just escalated it with IB. But certainly the feeling I'm getting is that they're not going to adjust it for an individual customer. I mean, they are large and I suspect rather bureaucratic, and they want to keep their good. They're very highly rated, and they're not going to risk losing that, I suspect. But anyway, I mean, I haven't got a definite answer yet. But the first suggestion was that they're not going to move them.
There was some fellow, I think you were talking about the same person I'm thinking of, on the Yahoo groups that was trading substantial positions in the rut. I mean, 50 to 100 contracts, and he quoted a margin level that was, almost minuscule. And I ran the same trade on Thinkorswim, and it was going to cost me, in a sense, close to $1 million in buying power to put on the same trade that he was putting on for, I think, $40,000 or $50,000, if I was reading the email string correctly.
Yeah, actually, I saw your email on that, and I've been comparing. So that with the straight Reg T margin, your margins were quite a bit higher than the IB ones, but with portfolio margin, it should be lower.
I could get portfolio margin. I just I've never needed it in a sense, only because I'm trading so conservatively that I never go on margin to begin with, and I didn't want to have the extra margin. But right now, I haven't, had a need for it. I guess if I ramp up substantially my trading in terms of options on the various indexes.
I fully sympathise with your position, and I'd always felt that myself in the past.
Right.
But really, since I'm concentrating pretty much on the Karen style trading, this was well, first of all, it might well be needed if there's a substantial move, because I think one's going to end up wanting to use what capital is available if things got nasty. And I felt this was a very good time to raise the question with them, while everything is very, very smooth at the moment, and that obviously the time not to be doing it is when you absolutely need it. So really to find out exactly what the position was and whether there was any chance of getting any change there while things are so quiet at the moment. It seemed a good time to do it.
Well, Ryan can tell you all an interesting story about what happened with him and Thinkorswim on a very small position in his account, where it seemed like Thinkorswim just decided, independent of Ryan, what they wanted to do with it, which was shocking to me. I don't know, Ryan, if you've gotten any more feedback from them or Tom.
Yeah, I actually did get an email back from Tom, and he told me, let me look at it real quick. He told me it was very unusual, and he actually gave me the head of the margin department over there to contact, because he said he was interested in hearing their response as to why they did that.
Right.
So just to give you guys a little background, and then I've got to get out of here. So I had a position in TLT, which is a pretty common. It's basically a bond ETF, and I had a call position that went ex-dividend, so I got put. Or actually, I got short 500 shares of TLT. So in turn, I decided to go ahead and hold the short position, waiting the next couple days just to see, what was going to happen with TLT. Was it going to come back down? So on and so forth. But I believe it was last Tuesday, I got a call about 15 minutes before the market was closing that I didn't answer the call because I was in a meeting, and there was a voicemail telling me that I needed to close my TLT short because it was hard to borrow. And then I also got an email at the same time. So in turn, well, in the voicemail, the gentleman said that he was going to close it. He would close it if I didn't close it as it was or cover it. So I didn't get I called him back 15 minutes after the market had closed, and sure enough, he had closed my 500 short TLT, and he had also closed a put that I had rolled up from 115 to 117, just trying to get a little more. I was trying to collect a little more premium just to balance out any loss in case it didn't come back.
I've got a very similar position.
What's that?
I've got a very similar position.
Oh, okay. So in the end, I mean, what ended up happening was when he closed everything out, I mean, I ended up making like $400 on the trade or something like that, because TLT that Monday, it actually made a huge move back, and so I was in a pretty good position. But what was interesting about it was that he did take over my account and did these actions basically without my approval. So I thought that was interesting, obviously. So I emailed Tom over at Tasty Trade just to ask him if it was common for this to happen, and I said the reason they told me they did it was because it was hard it was hard to borrow, which that didn't fly. Even Tom said it's TLT. Plus, it wasn't listed in TOS as hard to borrow. So basically, here's his response. His response is, I asked, is it common for TD to do? And he said, no, it's not common. I said, is TLT really hard to borrow? It doesn't display this in TOS. He said, no, also very strange. I said, how much control does TD have over our accounts? He said, none, except when they feel they are at risk, which I thought was an interesting answer because that's my point. I mean, whenever they're really in control. If they feel at risk, I believe they closed the position because they felt it was too risky. I mean, it was a $56,000 position, I believe, the short. So I don't know, $56,000 on a $200,000 account. Does TD? So then I asked, does TD have the right to make trades on our accounts without approval? He said, no, never, except in situations like the stock going too hard to borrow, or them having too much risk with too little money in corresponding account. So, but I'm just kind of, that's not how they positioned it to me. They didn't say, hey, you don't have enough margin to cover this, or it's too risky. They just told me it was hard to borrow, and that's why I had to cover it. And then he said, email Pete your questions. Pete is a great guy and runs all the risk assessment at TOS and TD. So basically, that's what I'm at, and I haven't emailed this Pete yet. So
I understand the short position, which I can accept that. What I don't understand is how they can, in a sense, force you to close out your put position. Because as long as you had cash in your account to cover the naked put, should the stock go back down, or to buy back the put, to me, that should be acceptable.
Yeah. I asked him about that, and he said his reasoning behind that was that if he ever has to close a customer position, it sounds like, I mean, he's done this before, obviously. He said, if I ever have to close a customer position, that I won't leave them naked. I won't leave a naked put open. That was his reasoning. So take it for what it's worth. I don't know if that was his personal choice. I don't know if they have like hard and fast rules that they say this is, there may be a rule over a TD that says if you close someone's short or you close any position, don't leave them naked. Close the other position. So
I would think that's not unreasonable. I mean, there seem to be two questions here. One's a very general question, and one's specific about the position you had and hard to borrow stock. So the general question, whether they can do anything at a time when they don't feel themselves actually under threat. I mean, they shouldn't be doing it for the sake of your account, because that's your decision.
Right.
They can surely only be closing positions without your permission when they feel they themselves are under risk.
Right, and I mean, even with my short, I had available funds. I mean, it wasn't like I was in a call. It wasn't like I was negative or anything. So, I mean, the hard to borrow theory could be accurate, but I mean, it wasn't indicated.
There's nothing that shows on IB at the moment for TLT as being hard to borrow.
Exactly.
What exactly does hard to borrow mean? If you want to put on a short position and it's hard to borrow, you may not be able to put it on. But to actually take it off because it's hard to borrow, that doesn't sound, well, I don't know the exact mechanism, but it sounds a bit different from saying, well, you can't put it on if you already have it.
Yeah, I mean, I'm not too educated in how the whole hard to borrow thing works and how they're, on the back end, how are they borrowing, or are they, how are they accessing those shares? I don't know. I don't know.
Well, I'm short 200 TLT that I've been short for a couple of months now.
Uh-huh.
No, I haven't seen any sign of any problems.
Right.
I've had short puts against it for most of that time.
Right. So,
but obviously it worked out quite well for you, but it might have been a different story if it hadn't been for that big fall the other day.
Yeah. I mean, I got totally lucky. I'll be completely honest. I mean, I missed the ex-dividend and didn't realize it was coming. So, I got exercised, and so then I'm like, oh crap. And then luckily Monday the thing just fell off a cliff, and so it actually put me positive because I would have been heavily
Was it a
negative.
fully offsetting position? Because presumably, if you were short the same number of puts as you were stock, shouldn't they just offset each other? So if you put the stock, it should just cancel out your stock.
Yeah, but he put on the trade initially as a straddle. You sold calls and he sold puts at 115.
Yeah, it was a straddle. I had 115. I'm looking at it now. I sold 5 115s in September and sold both calls and puts. So, and so then here's a little icon actually. It's funny. Margin sellout order. That order that he did has a little icon in toss. This is a margin sellout order which cannot be canceled or replaced by the user. Please contact our trade desk for more information. In my account statement, it's got a little icon that says that.
So that sounds as though like a margin call situation, didn't it? So,
yeah.
But it wasn't, presumably.
Well, that's
just how they handled it. I mean, if they had to get out of the short position because the stock borrowing wasn't permitted anymore, maybe that's the closest icon that they could put to explain it.
Yep.
Message has been
so anyway, I've got to head out, but I just thought I would throw that out there because I think in the past on our calls we've talked a lot about just how much control do you have, and if there was a black swan event and whatnot, especially if you're trading SPX and you're using portfolio margin and that kind of thing, if there was a big move, it's always been my position that if you've got a lot of risk out there, that some things may happen that you may not be in total control of, is my point.
Yeah. Well, I mean, I think, I don't know if you read Jeff's account of his experience in the flash crash. And that really sounded bad.
I haven't had time. I haven't been following.
It's worth reading his stuff. He seems very good to me. It's really worth reading. And basically, he said he couldn't do a thing.
Right.
I mean, that just nothing was available.
Right.
And I forget exactly which contracts he had. Well, I've got a feeling they were SPX contracts, but I'm not absolutely certain of that. I think they were. And he said that.
My personal opinion, I'm completely convinced of that. This is a derivative market, and if anything goes screwy, or it's based on technology, and if it goes skewed, there's going to be a lot of people scrambling to do a lot of things, and I'm not confident that you're going to be able to do hardly anything. That's why. Don't get me wrong, I believe in the market, I believe in trading. I just think that you have to be realistic about the risk that you have in play. I approach it as, we kind of made that whole Las Vegas analogy thing, I approach it as, this money is not in your pocket. This money is in the pit boss's pocket. And yes, you're playing with that money. It's like a marker, right? You're playing with the money. But at any time, that the house can decide that they're going to make the play for you, or they're going to want their money back. You know, that's just my opinion. I try to be realistic about that. I think that I don't think that we're total control.
Yeah, I mean, I can't disagree with you. And then you're immediately up against the thing that to get any sort of decent return from it, you've got to ramp the risk up to some extent.
Yeah. Yeah.
If you don't do that, you just don't get the returns, and it's a difficult balance.
The premium's got to be worth it. You know, the premium's got to be worth. The way I look at it is every penny you put out there in risk, I look at that money could be gone, you know, at any moment. So, you know, don't pretend that, you know, if something happens, I can move around, I can hedge, and I can defend, and I can do all this. Yeah, I mean, to an extent, if it's not a big move or anything, but if something big happens, I tend to believe that you better be ready for all of that to be, you know, to be at risk on the table, basically.
Just don't get. Yep.
Okay,
I
guys,
know you've got to go. I'll just leave you with something, a little local difficulty we got here. I don't know if you've heard about the Scots. A lot of the Scots want to get out of the UK, and they're having a vote in 10 days' time, a referendum which would determine whether they can leave. And just over the weekend, there was a poll that showed for the first time that the yes vote, that's the people who do want to
create their
might just succeed. So it's hit the pound quite hard. So we've got a little local difficulty here.
Really? I haven't even heard about this. So you're talking about this, that Scotland wants to be a sovereign nation?
Out. Yeah. Independent nation.
Whoa. That seems like it would be a huge deal. That's like Texas.
Nobody understands the economic consequences of that.
Right.
You know, where it leaves them with the pound or without the pound, or whether it leaves them in the European Union or outside the European Union. All the businesses in Scotland a lot of them might want to relocate. Nobody's worked any of these things out.
Yeah.
Interesting situation.
Interesting. Okay, I'm going to leave the call up and running. You guys can go ahead and take it from here, and I will talk to you over the community next week. Okay?
I have to go
Thank
as
you.
well. Maybe for
See you next
Ann
time.
and for Ed, on the next call, we could maybe focus on discussing more, market awareness types of topics and trade ideas. The last few calls have been rather general in nature, and maybe we can drill down next week into specifics and where people see the market going, especially for those of us who are trading Karen style. I think it would be great to be able to hear other people's perspectives on where they see either the SPY, the SPX, the Qs, whichever indexes you're trading, where you see certain support and resistance areas and whatnot, and then specific trade ideas. I know that Ryan and I are trying to put all of our trades up on the shared folder so that everyone has access to them, good, bad, or indifferent. And it would be good, just general discussion. I know it would certainly help me to hear from others where they see the markets moving, maybe looking out just a week or two. That would be beneficial on my end.
I'll be happy to share my experiences.
Great, great.
So I'll see you next time.
Yes. All right. We'll reconvene then next week.
Bye.
Thank you.
Very good. Thanks, Ann. Take care. And
Take
Ed,
care.
good hearing from you. Take care.
Bye.